Welcome to Shivkumar classes. Now I am going to explain about modern accounting rules or American accounting rules. In my previous video already I have explained about the traditional accounting rules or the golden rules of accounting or the English accounting rules. Now to make it as very simple, I have made it is into the 5 different headings into the one single line, and detailed explanation it is I given it is into the same video, it is into the remaining portions of that one. Please watch this video without skipping the any concept. Now coming to the classifications, or it is made in such a manner that first one is the asset, second one is the expense, third one is the liabilities, fourth one is capital, and fifth one is the revenue or income. And either it will be called as revenue or it will be called as income. First one is debit. Increases. Asset debit increases and credit decreases, and detailed explanation I have given it is into the further coming videos that. And next one is the expenses. Increases. In terms of expenses it is increases, debit is increases and credit is decreases. It means that debit increase in expenses, credit decrease in expense. Asset debit increase in asset, credit decrease in asset. Next coming to liabilities. Debit decrease. It means what? Debit decrease in liabilities, credit increase. So it means what? Credit increase in liabilities. Next capital. Capital is decrease, debit is decrease, debit decrease in capital, and credit obviously increase. Yes, in the same manner for revenue also, debit decrease in revenue and credit it is increase in revenue. And further detailed explanation it is following now. The rules we are going to see for asset. The very simple to remember. In opposite cases, let us remember it is into opposite cases. Asset, opposite is liabilities. In terms of asset, debit increases, credit decreases. In terms of liabilities, debit decreases and credit increases. What is the logic behind this? So debit increases, credit decreases means that, if I want to say in simple meaning, that purchase or acquisition of asset will increase the asset value. If the same asset is sold, sale of asset, definitely the asset value will decrease. Coming to liabilities, debit decreases and credit increases. So credit increases means that loan borrowed. When we borrow the loan, the credit it says that increases. When the loan is repaid, definitely what happens, it is decreases. Yes, so debit decreases, repaid of loan, and credit increases, loan borrowed. So any borrowed amount or the creditors or bills payable, whatever may be, increases will be in credit, debit, and decreases will be in credit. Next coming to expenses. When an expenses increases, debit increases and credit decreases. What is the logic behind this credit decreases? How that expenses can be decreases? One logic behind that, it is, for example, expenses I have written 1200 instead of 1000. 200 rupees has been recorded extra. The 200 rupees I have to give the reverse journal entry to make it reduce that one. So that one it is reducing of the expenses, credit decreases. Next, coming to revenue or income, even here also it is same. Debit decrease and credit increases. Debit decrease in revenue and credit increase in revenue. The same concept is here. If the revenue increases, that is the credit. In case if the same reverse order, that 5,000 rupees, I have recorded it is the 5,500 rupees. 500 rupees extra has been recorded, that has to be reduced by reverse journal entry. For that it is decrease in income. Next, coming to capital. If investment is made, that we will record it into the capital. Now debit decreases and credit increases. So increases means that capital investment. The capital investment is the credit, and if the drawings are made from the business, that definitely the capital value is decreases. This is the example, so that the same explanation is given once again to make you understand. It is very easy. Let's see here. To make it is very simple. Asset and expenses, liabilities, capital and income. Yes. For asset and expenses, the rules it is same. Debit increases and credit decreases. Next, coming to liabilities, capital and income. Asset is 1, expense is 2. I'll make it as 3, 4, 5. For all these cases, debit decreases and credit increases. Yes.